start the conversation by getting your thoughts on AI, if I may, because this has also been an important topic of your research and your team. And there's an ongoing debate here about AI valuation. So I just would like to get started by getting your thoughts on what you think is the theme and the mood ultimately in AI at this stage.
First of all, it's a pleasure to be here. And yes, the debate is going on again, are we in a bubble or not? I urge you to think that the story is so much bigger than the next quarterly numbers, the next investment or the next TPS. We are doing a mistake again and again with AI. When we think on AI, we think about those apps that can summarize our email, build our presentation, or make our work a little bit more efficient. This is not why we're spending the trillions of dollars. AI is so much bigger. To go and say that AI is all about the ChatGPTs of the world and application to summarize my emails, to say that we build the internet revolution to have Spotify or the mobile revolution to book an Uber. It's only one application. The story is bigger. We are looking at AI simulations that can create drugs, can calculate the weather, can dramatically improve food consumption, that can do so many things that humans can't do and crunch data in a better way that will about to change everything. Create new materials. We're already starting to see that. Improve the industrial revolution. We are so focused on the quarterly numbers, on the current investment, on the very small application that we are seeing today, that we are really missing the big picture.
However, though, last year you also mentioned how when it comes to the energy side of things, we are not prepared for this AI revolution. So is that still limiting the growth that you project for AI?
Definitely, this is one of the bottlenecks that we are seeing right now. This revolution is happening so fast, and we need to build all the infrastructure, all the data centers so fast that we just don't have enough resources. We need to build roughly 50% more data centers in the next couple of years. If we will build those data centers, and I'm talking about those huge AWS, Azure data centers size, we are talking about more land than Singapore to host them and more energy than Japan to power them. We need so much more. We need more water. People are not talking about that, but every 40 commands on your application, could be ChatGPT or Gemini, every 40 commands drinks 1 liter of water. There are billions of commands a day. So we need more water, we need more natural resources, we need more energy. Those are the bottlenecks. This revolution is happening so fast, warp speeding, that nothing like we've ever seen in the past, and we do need so much more resources. On the other side, there's a clear interest to develop the technology, not to limit the progress over here. So we have to balance, and we have to come up with new ways of powering out our networks and generating more energy. And we are moving from a world from energy transition to...
Since Nvidia is the biggest corporation in the world, it has a significant impact on how well stock market indexes, like the S&P 500 and the Nasdaq 100 perform. On November 19th, Nvidia will release its fiscal 2026 third-quarter operating results. The market as a whole may be affected by the stock's following response. The current attractive valuation of Nvidia's stock may pave the way for further growth beyond November 19th. Since market capitalization is used to weight both the S&P 500 and the Nasdaq 100, the biggest companies in each index have a bigger impact on their performance than the smallest. With a $4.6 trillion market valuation, Nvidia is the biggest corporation in the world. Because of its 8% weighting in the S&P 500 and its massive 14% weighting in the Nasdaq 100, a significant movement in its stock might cause the market as a whole to move. The company's leading position in the artificial intelligence (AI) sector also tends to influence many other big tech stocks. Nvidia will make its operating results for the third quarter of fiscal 2026 public on November 19th. The company's stock price may change significantly if its revenue, earnings, and forward forecast meet or above Wall Street's expectations. As a result, the outcome of next Wednesday may have an impact on the course of the whole market for the rest of this year. Continue reading. Building AI models requires a significant amount of processing power, which is usually provided by centralized data centers. Since Nvidia's graphics processing units, GPUs, continuously raise the bar for performance, they have emerged as the preferred data center chips for AI workloads. As the most potent processor for creating the large language models, LLMs, that drive AI software, Nvidia's H100 GPU, built on its Hopper architecture, gave the corporation a 98% market dominance in 2023. Leading AI firms, such as OpenAI, Anthropic, and Meta Platforms, have switched to reasoning models, which take more time to deliberate in the background in order to eliminate errors and produce far superior results. According to Nvidia CEO Jensen Huang, reasoning models need a lot more processing power than typical LLMs because they use up to 1,000 times as many token words and symbols. That is precisely what the company's Blackwell Ultra GPU architecture does, and it has increased the chipmaker's hegemony in the data center market. Demand for the Blackwell Ultra GB300 processor is currently far exceeding availability, and it can perform up to 50 times better than the H100. On November 19th, investors will be eager to hear Huang's description of the demand picture and will be waiting for an update on GB300 sales. An update to Nvidia's Rubin architecture, which is expected to be released next year, would also be highly anticipated by certain investors. Early studies suggest that it could provide 3.3 times the performance of Blackwell Ultra, making it 165 times more powerful than Hopper. For the third quarter of fiscal 2026, Nvidia projected $54 billion in sales, a 54% increase over the same period the previous year. According to prior quarters, the company's data center business, which accounts for sales of its AI GPUs, is probably responsible for about 90% of that total. According to the consensus expectation from Wall Street, Nvidia also made about $1.25 per share during the quarter. Since earnings are usually used to determine a company's value, this figure may have a significant impact on Nvidia's stock price after November 19th. Wall Street will also be keeping an eye on Nvidia's future guidance on November 19th. If management releases a larger figure, it may indicate that GPU demand will be stronger than anticipated over the coming months. Analysts are aiming for a revenue prediction of $61.3 billion for the fourth quarter, which ends on January 31, 2026. That would be positive for the stock of Nvidia. For the best outcomes, investors should always concentrate on the long term because short-term movements in any stock are frequently merely noise. For a business like Nvidia, which is spearheading the AI revolution and has the potential to generate multi-trillions of dollars in revenue over the coming years, this is particularly true. Having said that, Nvidia's stock has increased by 7% since the company's most recent earnings report for the second quarter of fiscal 2026 was issued on August 27th. Given the explosive gains that Nvidia's stockholders are used to, that doesn't seem like much of a gain, but the stock is trading at a favorable level as it enters November 19. That might pave the way for far more potential. As of this video, Nvidia's price-to-earnings (PE) ratio stands at 53.5, 12% below its 10-year average of 61.2. However, things get better because Wall Street projects that the business will earn $6.68 per share in fiscal 2027, starting in February 2026, which would put the stock at a forward PE ratio of only 28.1 per share. To put it another way, if Wall Street's prediction turns out to be correct, Nvidia's stock will need to rise by an astounding 90% over the course of the next 12 to 18 months in order to keep its present PE ratio. In conclusion, investors should maintain their focus on the long term because that is when the true potential gains are likely to occur. Nvidia's upcoming earnings report on November 19th may, in the short term, set a positive tone for the overall stock market. Unavoidable speculations followed Nvidia's most recent round of share sales, which included SoftBank's $5.8 billion departure and other institutional cuts. Is the AI trade becoming less attractive? A deeper look reveals a different situation. SoftBank is investing more in OpenAI, robots, and data centers that employ Nvidia's own chips rather than retreating from AI. Furthermore, the street isn't exactly evading it. According to a new research note from Bank of America Analysts, the current wave of AI skepticism is healthy but overstated. It is likely a contrarian positive, helping to minimize overcrowding, they added. In other words, what appears like selling can be a rotation, not a retreat, inside the same AI boom. Although SoftBank's $5.83 billion sale of its whole Nvidia stake made headlines, the transaction reflects liquidity rather than a loss of confidence. As part of its asset monetization strategy, The Japanese conglomerate sold 32.1 million Nvidia shares in October, along with some of its T-Mobile assets. At an investor presentation, SoftBank Chief Financial Officer Yoshimitsu Goto stated, "We want to give investors a lot of investment opportunities while we can still maintain financial strength. Therefore, we ensure that we are prepared for fundraising in a very secure way with those options and instruments," he continued in remarks that the business translated. $22.5 billion in fresh investments in OpenAI and other projects, such purchasing ABB's robotics division, will be financed in part by the proceeds from the sales of Nvidia and T-Mobile, as well as a margin loan on SoftBank's ARM assets. The share sale also helped SoftBank have a successful quarter, as the company tripled its profits, and its vision fund made $19 billion. Even after selling its interests in Nvidia, SoftBank is still heavily involved in the AI ecosystem, from robotics to large language models. A large portion of this still uses Nvidia technology. Even though SoftBank is changing its portfolio, it still has the same vision for the future that Nvidia has. Although SoftBank wasn't the first company to reduce its holdings of Nvidia stock this year, Wall Street's explanations seem more like a housekeeping than a violation of the law. In recent quarters, a number of large investors, including State Street, Bridgewater Associates, and T. Rowe Price, have sold off a portion of their Nvidia holdings. This is primarily due to their desire to avoid overconcentration in their portfolios after Nvidia's incredible surge. As part of their prearranged 10b5-1 trading plans, insiders have also sold shares, including CEO Jensen Huang. This allows them to lock in profits without changing their overall exposure. However, no significant investor has claimed that their sale was due to a shift in their beliefs, and institutional ownership is still rather strong. Numerous funds have invested in AI-related ventures, such as manufacturers of semiconductor equipment, data center operators, and power supply companies. These businesses all support the same ecosystem that Nvidia controls. According to analysts, this stage is a time for balance rather than retreat. When they increase 5 times in less than 2 years, it's common for things to shift. They contend that what matters most is that folks who purchased those equities still wish to work in the field of artificial intelligence, which maintains Nvidia at the forefront of the discussion. The market usually interprets Nvidia's sale as a vote on the AI boom as a whole. However, the evidence implies a different direction. The big investors, like Bridgewater and SoftBank, are shifting their positions rather than retreating. Nvidia's foundations seem incredibly solid, despite the recent AI skepticism that has been prevalent. It is forming alliances in South Korea and Germany, has orders for data centers totaling roughly $500 billion, and has a global supply chain based on its architecture. Those factors don't indicate that a business is stalling. The most recent stake reductions show how much of the market's exposure to AI is now handled by Nvidia and how challenging it is for investors to fully abandon the field. Although selling the stock could cause some debate, the story always comes back to the same conclusion. Nvidia is still the engine of the AI economy, and a poor quarter or a few big exits won't change that. Many investors believe that Nvidia is the greatest method to profit from the AI growth because the tech company designs the processors utilized for crucial AI activities. Furthermore, Nvidia has demonstrated its power in ways other than just stock performance. As AI clients scramble to get their hands on Nvidia's potent graphics processing units, GPUs, the company has produced revenue increases over the course of 2 years, with annual revenue rising by more than 300%. However, investors have been closely monitored Nvidia for any indications of weakening following such advances. They've worried about a potential AI bubble and whether growth really may continue at the current pace. The fact that SoftBank recently sold all of its shares in Nvidia may therefore raise concerns. But let's look at the one important item you should know before making any judgments. Let's start with a brief overview of Nvidia's AI journey thus far. As previously stated, the business offers GPUs for sale, but not just any GPUs. In addition to outperforming all other products on the market, Nvidia provides a comprehensive range of associated goods and services. For any AI project, Nvidia can thereby meet the needs of any AI customer. Nvidia's GPUs are crucial investments for data centers today as the infrastructure ramps up, and they will be even more crucial tomorrow when AI users use the technology to solve practical issues. Nvidia has garnered investment from regular investors, billion-dollar hedge funds, and until just recently, Japanese holding company SoftBank had a stake. However, SoftBank announced this week that it sold all of its Nvidia stock in October for over $5.8 billion. To find out what this SoftBank move means for Nvidia, let's now examine the one item you should know. SoftBank stated that it sold the shares to help finance other AI projects, without expressing any decline in confidence in Nvidia's future course. According to Bloomberg, SoftBank executives stated that the change was merely required to support other projects and had nothing to do with Nvidia. Going a step further, I would add that this action sends a positive message about the technology's future by enabling SoftBank to expand its presence across AI opportunities. SoftBank appears to be quite bullish about the future of AI, as seen by its goal to invest in as many innovative AI companies as possible. As I mentioned before, Nvidia is a key player in the creation and application of AI, so this is fantastic news for the company. As long as Nvidia maintains its innovation objectives, the company will almost certainly profit as the technology gains traction. Therefore, this SoftBank choice should be seen as evidence that AI has many promising futures rather than an indication that Nvidia's business is waning. Although Nvidia isn't giving you a great deal at 42 times forward earnings estimates, it is also not out of sight. Given the company's advantages in the rapidly expanding AI field, the valuation is still fair. Therefore, it's still possible to purchase this stock, particularly if you want to hang on to it for a number of years. The greatest approach to succeed in investing is to own equities for a long period. This gives businesses time to grow, and in a rapidly expanding industry like artificial intelligence, the results might be astounding. Because of this plus SoftBank's continued optimism about the AI environment, Nvidia stock is still a great investment to hold as the AI revolution proceeds. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.